Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments for Wednesday, the 5th day of August. Another whippy garbage overnight low volume trade. Diesel corn traded down to 458 and three quarters after hitting a high of 66 and a quarter last night. Why is 58 and three quarters so important? Well, it's halfway back. Halfway back of what, you may ask? Well, the low on June 30th was 425 and three quarters. The high of the move was 492. We're back here again, 458 and three quarters. If that fails, the next downside is 450, 451, which is the 62%. Me pointing that out is not me predicting we're going to get there. It's just showing you that there's still risk. And don't get caught into the trap of saying, well, I saw this on social media or I heard this on the radio, so I'm not going to do anything because I was told we're going to go here or I was told we're going to go there. Defend what you can. That's what I put in my letter yesterday. Novi beans back down to the 100-day moving average. Another garbage trade overnight. We opened at 77, hit 81. 3 o'clock in the morning, we're trading at 67 and a quarter. We're settling here in the morning here at 1170, right on the 100-day moving average. If the 100-day moving average fails, and I've got to say this, if it fails, the next big support is the 200-day moving average, which is down at 1136. The low on June 30th before we took off was 1125. So me pointing that out is not me hoping we get there. Me pointing that out is not saying we're going to get there. It's just telling you that there's potentially at least 40 or 50 cents worth of risk in beans if you do nothing and beans sell off. It's every person's decision what they want to do. I can just tell you that you may want to set a hedge. You may not. It's a free country. Decent wheat, Chicago, uh, almost a 12 cent range overnight. Opened at 56, hit 64, and we're back to opened. Yeah, we're actually on our highs here. 664, up 6 and 3/4 cents. So what's going on? I don't know. People are selling corn and beans and buying wheat. Wheat is at a very, very key support there as well, technically. When there's no fundamental story, when we don't have daily news about uh, big buys or daily news about a weather market, the technicals become very, very, very important. And what they become is they're like kill zones. We get to that area and we trade around at a penny or two or three. We chop everybody up, and then we go back to price discovery. So these levels are important, but they're also very, very dangerous. Moving over to the livestock, we had a good recovery yesterday in the cattle. We'll see if that can continue. Hogs also were a little bit higher, but hogs have had a lot of damage down here in the past 2 weeks. That's it for this Wednesday. Very technical. I'll just leave it at this. Do not get trapped into getting emotional here. Don't just listen to the person that tells you what you want to hear, that makes you feel good. There's a lot of risks still on the table. Corn is halfway back. Beans, excuse me, beans are right there on that 100-day moving average. Um, Beans have also given back 62% of the rally. So are we oversold? Yeah. Doesn't mean we can't go lower. Defend what you can. And that's how I'm going to leave you today. Hopefully we don't have a whippy Wednesday. This is Chris. Have a good day.